Hello, everybody. This is Joshua Hayes at BigWaveTrading.com coming to you with today's stock market wrap up for March 3rd for you to use March 4th or any day in the near future. I did not have a video yesterday as I am going around Maui with a friend doing fun stuff, and we'll be done with that by the end of next week, so we should be back to normal on Monday. So for any of you that think that the videos are missing or anything, they're not. I just won't be doing as many. I'll be doing one today, one probably Thursday or Friday, definitely for the weekend, but it'll be right around there. So bottom line, I'm still here, still short, still making money, watching most other people lose money that are telling me the market's bottoming. So let's go back to what we're at. The downtrend from October for the New York Stock Exchange is now down, the index is now down 57%. And one of the simple things that I keep on telling you that you could have done to stay out of this entire bear market was once price got below the 50 and 200-day moving average, and then the death cross in 2008, January, of the indexes after going below the 50 and 200-day moving average, that would have then been your signal to get out. And your signal to get back in wouldn't be until after the prices are above the 50 and 200-day moving average and a golden cross is about to occur. Until you actually have that, there is actually no reason to be going long this market. And as you can see, the 200-day moving average is still way far away from the index price right now, and that's not good. Also not good. However, sometimes it works as a contrary signal. We have red bottom now in the New York Stock Exchange. If you look back in October, it just signaled it was near the end of a bottom for the time being, but as you can see now, we're at lower lows. So the red bottom might indicate that we could bounce around a little bit, but I doubt it. I think that we're just going to, if anything, we can get back to the 50-day moving average. That still will not set up any new longs for us to go long, and instead, if anything, will give us more shorts to go short. However, in saying that, I don't think we need to really add to our shorts unless there's a really screaming setup, because we now have 50 shorts, and yesterday we had a total of 51 shorts, and out of those, we had 49 shorts, and out of those 49 shorts, 48 went up. So that was on Monday, 48 for 49, and then today, I don't know exactly what it was, but I have a list of all the shorts that are up today, and it looks to be right around 40 of the 50 of our shorts were up. So we're clearly on the right side of the market. Now, at the exact same time, we have 5 longs. 2 of those are gold stocks. They look great. 2 of those have got us a 27 and a 54% gain already. They both start with the letter A. They both still look great. Not great. One looks like it's on the verge of going away. And then the other one that I got to think, is one that we just went long, and it still looks great for its beginning position. Still has green bop, starting to go the wrong way, I do believe, but price is holding in there. Volume's lower on the pullback. So I can't say that we're doing anything wrong at Big Wave Trading. We got it all right. Our longs are right. Their past 2 days, not one needed to be sold completely. We only had to partially sell one of them that we just recently took. That wasn't even a 7% loss. And all of our shorts are just racking up gains. For instance, today, 88%, 60%, 75%, 93%, 36, 36, 38, 54, 34, 60, 32, 52%, 40%, 64%. So we're definitely on the right side of the market, and there's definitely nothing for us to worry about. So congratulations, all Big Wave Trading subscribers. I'm sure you're all making money. And if you didn't notice, I posted in the Gold Forums today Jim Cramer's returns, and I don't mean to beat a dead horse to death, but past death, but he's down 15% this year, while I'm up almost 15% this year, holding right around 85% cash. My IRA has just gold in it, and it's up more than Cramer's down this year. It's up like right around 4% or whatever. I have to recheck on it since I put the gold in the account. No matter what, though, it's not down 15%. Also, since January 1st, 2002, your average annual return with Jim Cramer is a whopping negative 27%. During that time, I believe mine is a positive 40 to 50% because last year's numbers were weak. 2007 wasn't that great. So the 1,000% return on 2003 wasn't on all my capital because I was still playing poker a lot then. So that actually is what's hurting the annual returns since the exact same time Cramer's showing his annual returns. Bottom line is, you can go look at his portfolio and see that every single long he has given is down. He does not have one single winner. And almost everything that we hold, both long and short, is a winner. We have 55 total holdings, and I believe 40 48 of those, or 49, I'm just looking on my list really quick here, guesstimating, are in the black. We are only in the red on some longs and then one or two shorts. So we're doing great, and I'm very happy with the situation. So let's go and just wrap this up. You know it's a bear market. NASDAQ looks the same as the New York Stock Exchange. And if you look on the weekly, you can see those big, tall red bars are sticking up again. Look at the NASDAQ. Look at the New York Stock Exchange. Big, tall red bars. Look at the Dow Jones Industrial Average. Big, giant, tall red bars. So on this downtrend, it has been all distribution. This ain't like the 2002 leg down. This is like the start of a nasty 2000. And we've already been in a bear market for 16 months. I wouldn't be shocked if we have 16 more months to go the way that we're selling off on heavy volume. Thankfully, that'll allow us to have some great longs at the end of this while making some money in these shorts that we have while everybody else says go long. Let me go ahead and get off the indexes. Let me see how bad the S&P 600 did. We already know the leading IBD indexes are doing horrible. S&P 600 down 1.80% today. That's pretty bad. Let's see if it's close to being down 57%. Yep, 56%. 56.5%, so it's down 57% just like the New York Stock Exchange. So this is a pretty pathetic market, and it's been proven that it is a shorts market. Now, let's look at some other things. Let's look at oil. How is oil looking? Well, after oil's nasty 8% decline yesterday, it's holding in around 41. Like I said, I assume 30 and 50 oil's going to be stuck at for a while. So until it breaks out of this 30 to 50 range, I wouldn't be looking to do anything with oil. How's platinum looking during all this pullback? Platinum's looking good. Also, platinum has not closed at the low of the day, did not close at the low of the day Monday or today. So that's good. Silver, on the pullbacks, look at the pullbacks on Friday. Big tail, Monday, big tail, today, big tail. So silver is clearly being accumulated as it pulls back towards the 50-day moving average and actually intraday support. Buyers are stepping in and buying it. We do not have the volume on the telechart, so I can't show you how much conviction there is, but we know the economic situation in the United States of America, and we know that gold is real and gold will never be worth zero. So, and as we can see here, ever since hitting 1,007 on 220, gold has pulled back 1, 2, 3, 4, 5, 6, 7 straight days in a row. That's pretty oversold, but nothing says you can't get oversold. And it actually did not touch the 50-day moving average today. However, it's close enough. If it pulls back one more day tomorrow and is right around kissing the 50-day moving average, that would be your time to add to the buy that you would have taken back in December with the move over the 50, and in January with the move over the 200, and in February with the golden cross. So no matter what, you should be looking to buy gold on the pullback. And to be honest with you, if it can get back to 600, 700, I'd say load it up in your IRA if we still don't have any hot stocks. I mean, what else can you do right now? Now let's look at the United States dollar. Everybody's saying dollar's going to go broke. Well, I believe that, but is it going broke now? No. Look what it's doing. New highs. That's a new 52-week high right there, folks. And actually, if we go back, the 2009 high is the highest point since 2006. So we're hitting a 2.5-year high with the United States dollar. So while gold has actually pulled back the last 7 days, the dollar is, oh, I pressed the wrong thing, DXY0. So during the 7 days, the gold is pulled back. The dollar is actually up 2.83%. I want you to remember, no matter how bad it looks in America, it's worse in the other countries. I know that's shocking. But as we head down to the road to socialism, I guarantee we are soon going to become one of these countries that are stuck in the mud like Japan and Europe is right now, because you can't increase the size of government and intervene in free markets and get huge returns. We're going to have good stocks out there like Taser in the future, but you know, they're going to be fewer and far between than they ever have been before, as long as we keep on adding more government and government policies. I just hope the entrepreneurial spirit of America is strong enough to get us through this, and I hope enough people wake up to kick those bastards that we have in Congress out ASAP, because if you're going to keep those guys in Congress, I guarantee you're going to be paying 40 to 50% in all tax brackets for your taxes, unless you're the super poor, because since that's the majority of the population, they really, really feed it to them to make them feel like they're gaining success as we're losing our success, us in the top tax bracket. The only problem with all this is the top tax bracket creates jobs, lower tax bracket doesn't. So unless you're ready to rely on government your entire life, I would think about cutting taxes, and I'd think about the government spending chilling out a little bit. But good thing is, I run my own site, and even without my site, I know how to make money in the market. However, my big money comes from the longs, and those aren't anywhere to be seen. Maybe TSYS will turn into one later on. Maybe SIGA will turn into one later on. Maybe RGR will turn into one later on. But right now, it's all shorts all the time besides the 5 longs I have. I hope those longs keep on going up, but more importantly, I hope those max green BOP accumulation loaded, distribution weak filled, perfect price pattern charts show up again. I miss my max green BOP charts. I really do. So all we can do is hope right now, hope that they decide to stop interfering in our lives. The government is not good, folks, no matter what you think. This is Joshua Hayes at BigWaveTrading.com. Part 2 will be next for subscribers. Aloha.